Hello, way to students. So in today's class, I'm going to solve a question, solve a past paper to show you how to solve in exam. And the topic is your clubs and societies. So let's move forward. So I'm solving a paper from your summer May June 3-1 2018. That's the question. So this is your question out there. That's the question you can see here. So the first question given there is you have a club. This is the information of a club. You can look it up here. A social club provides activities for the elderly. It also provides them with meals and organizes coach trips. The ledger accounts of the club for the year ended 31 December 2017 included the following. So you have subscription account here, you have fitting and fixtures account, you have provision for depreciation of fixtures and fitting account, and there is additional information out here. And then down here there is answer the following questions. And the first question is state the difference between a club and a limited company. Number B is here prepare income and expenditure account for the year ended 31 December 2017 and prepare statement of financial position. So I'm going to focus here on this B and C regarding preparation of income and expenditure account as well as statement of financial position. A and C I will send you the slides so that you can easily understand. So let's move forward. So I have an answer out here. This I will send you. Okay, anyway, let me just give a quick preview of answer A. Difference between a club and a limited company. So here I think it's for how many marks? Let's have a look. It's for 4 marks. State two difference. You can simply give just two difference. So if you look at two difference, there you can give a number of reasons. Like number 1, difference between a club and a limited company. What's a club? A limited company. So you can say first thing on the basis of motive. Clubs are established for the welfare of members. That's without profit motive. While limited companies are established for profit motive. You can say that. When we talk about owners of a club are called members, while the owners of limited companies are called shareholders, that we know. Profit distribution, club surplus is plowed back in the club, while profit is distributed in the form of dividend in limited companies. So limited companies, normally they distribute the profit in the form of dividend, while in case of club, the profit or the surplus is not distributed among the members, it is used back in the club. So we're talking about transferable here. Clubs membership cannot be sold, so you cannot transfer your membership, but in case of limited companies you can sell your membership by selling your shares. So renew. Club membership must be renewed annually or in a lump sum, while in limited companies shareholders remain owners of the company as long as the shares is held by them, so they don't need to renew it annually. That's the difference out here. You can add any two. That's up to you to choose. So moving forward to the main question. Number B, prepare income and expenditure account. So in order to prepare income and expenditure account, we should try to remember the basic steps. The first step is step 1. You need to prepare opening statement of affairs. Opening statement of affairs is prepared to calculate the accumulated fund at the beginning of the year. So the question is, do we need to prepare it? So sometimes the data is given in question. In that case, you don't need to prepare it. So let's have a look here. We look at number 2. On January 2017, so that's the beginning of the year. How do you know it's the beginning? If you read the question here, the ledger accounts of the club for the year ended 31 December 2017. If the year end is 31 December 2017, obviously 1st of January 2017 will be your opening. So on 1st Jan 2017, the bank account had a debit balance of 4,700. So I have a bank account here, and the accumulated fund amounted to $114,850. So that's your accumulated fund. That's your opening accumulated fund. It means you do not need to prepare statement of affairs. So our step 1 is complete. Now the step 2, you need to compile your receipt and payment account, or you need to have a bank statement. So that's not given out here. If you look up here, there is no way bank ledger There is no way receipt and payment, so it means you need to prepare it based on this starting data here. The bank balance on 1st Jan 2017, the bank account had a debit balance of 4700. So we are going to prepare the receipt and payment account. So that's the solution out here. This is your receipt and payment account. I'm going to show you how it has been done. So receipt and payment in your left hand side is basically all the receipts. In the credit side, all the payments made in the form of cash or in the form of check. So now we will record all the items. So here is saying on 4th Jan 2017, the bank account had a debit balance of 4700, means opening balance is 4700. So that's very simple. So that's understood. Okay, let me use a different color. So that's your 4700 here. Now let's also start from here, from this subscription account. Let's start from here. Up here there's nothing else to do with bank. Subscription account, search for the word bank. You see a bank. See, this is bank. This means bank on debit. In the credit side, whatever is recorded, this item is debit. So bank on debit is increased. So you have a subscription receipt of 25800. So you record this 25800. Basically we are preparing the receipt and payment account. And there are no other banks. You go down here, fixture and fitting, there is a bank out here. So bank on credit, this is a bank on credit, means this is payment. So go in the payment side, 3300. Go down here, there is no bank out here. This is a provision for depreciation. It has no bank account, it will not have also. So this has nothing to do with receipt and payment. You skip this. Now we come to the first additional information. The club owned its own premises which had original cost of $100,000. These were not depreciated, so this has nothing to do with inflow or outflow of cash. So when you're recording it, remember you need to record it when there is inflow or outflow of cash or checks. That's your bank. So this doesn't go here across. On 1st Jan, this has been recorded opening balance. The accumulated fund has no relevance out here. Number 3, the sale of meal to his members during the year amounted to 21,500. Sale of meals. So obviously when you sell meals, cash is going to come in. So bank on debit. Here is a 215. So this is recorded. And made a profit of 2600. So made a profit of 2600 means you have a selling price, you have a profit. If you find the difference, that's your purchase. So obviously that amount is your expenses. Inventory of finished goods remain constant at 250. No purchase of foods were made on a credit basis. So you don't have credit basis, it means it's paid on checks. Checks payment are done. All receipts and payment for the meals were made to bank account. So it was made to bank account. So here what you need to understand is, let's have a look at the laser first. We'll have to make a laser for this. So this is your laser meal account. Now you have opening balance of 250 because here it's saying inventory of food remain constant at 250. So this is our inventory. So it's our current asset. So you have 250 here. Then no purchases were made on credit basis, means there are no credit purchase. And then since there are no credit purchase, what we are going to do is we are going to find how much is our cash purchase. So cash purchase is your 21,500 minus 2600. That's your bank. You subtract this, you get 1899 as your cash purchase. And then you have a balance CD, that's also 250. Now why are you putting 250 as balance CD? It's because here the question is saying inventory of food remain constant at 250. So it remain constant at 250 means whatever is your opening, that's going to be your closing. So this CD and here BD. So the difference amount I/E is a missing figure, 18,900. This will go in our income and expenditure account as meal expenses, 18,900. Both are same, so you don't have to worry about this, 18,900. So basically we are going to show 18,900 as cash outflow. So that's why you have 18,900 as cash flow out here. So I think you understood this as well. So now 3 is done. Let's go to 4. The club organizes 2 course trips every month. So in every month there's a coach trip being conducted. If you read up here, the social club provides activities for the elderly. It also provides them with meals, so it provides meals and organizes coach trips. So here the coach is about coach trips. 2 coach trips every month. For each trip, it hired 50-seater coach with driver at the cost of 1,000. So during 2017, the club sold 620 coach trip tickets for 25 each. So if it sold 620 coach tickets for 25 each, we are going to have a cash inflow. So 620 into 25 is going to be your increase amount here. 620 into 25, that's your coach ticket sales, 15,500. So at the same time, we also need to make payment for the coach hire up here. So coach hire is saying that 2 trips in a month. So 2 trips in a month in 12 months, 2 into 12, 24 trips, and the rate is 1,000. So this is not 2,000. I made a mistake here. Let's say 1,000. So 1,000. So 2 into 12 into 1,000 is your 24,000 is your expenses. That's your expenses as cash outflow. So this also has been recorded here. All receipt and payments are made through bank account. So basically this is your receipt and payment is your bank account. Remember that. Number 5. Other running costs paid during the year total 18,100. So paid means here's your expenses out here. Other running cost. This comes here. This included staff cost. Okay. Number 6. Staff cost of 200 was accrued at the end of the year. That's your payable amount. Now payable amount doesn't go into receipt and payment. Since there's no cash outflow, it doesn't go. So that's done now. So you add up the total here. You add up total. Total comes to 6750 in the debit side. That's your 6750 here. And then you did all the expenses, you get your balance CD. That's a missing figure as 32,200. That's the balance of bank balance at the end of the year. So this amount will go in the statement of financial position as bank balance. So this is our receipt and payment prepared. You can also write this as bank account and prepared. It's the same thing. It won't make a difference. But in a club, since we use a receipt and payment as a term, since receipt and payment is a term used out there, try to use receipt and payment. So that's done. So step 2 is complete now. So step 1 was given here. You can see here. Statement of face. Step 2 is done out here. Receipt and payment done. So now we go to step 3. So in step 3, you need to make adjustment accounts. Here, see, adjustment accounts. Now, to make adjustment accounts, you already have substitution account, you already have fixture and fittings, you already have provision for depreciation on fixture and fittings. So what remained was now this number 1, club premises need not be depreciated because normally land and building are not depreciated. So these were not depreciated, question is saying, so we don't need to depreciate it, and there's no depreciation rate anyway out here. So this one be depreciated, so no lasers required. Number 2, bank account, we have already made it, so this is also a part of your adjustment account, so we need to make this. Number 3, meal account, we have made out here. Meal account will be useful, so this is also part of your adjustment account. We have made it here. Now this 250 will be shown as your current asset. That's why we need to make this 250 in the statement of financial position. Then this number 4, you don't need to make it. This doesn't make a difference. Number 5, no need. Number 6, no need. So adjustment accounts are also done. So now we go to the next step. Now the step is income statement and statement of financial position. That's what we are going to prepare. So income statement will look something like this. I will explain each one in a while. Statement of financial position will look something like this. So let's complete our income statement first. Now to make your income statement, and that's the income statement out here, what we do is we will look in the receipt and payment, take the help of receipt and payment, and then start making it. So step by step. So in the receipt and payment, what we do is we go step by step. This 4700 will go no way. This is the opening balance of your bank balance. The closing balance closing balance 3200 will be useful. This will go in your statement of financial position. So let's have a look. And before we skip this, in the statement of financial position, if you look at your bank balance, oh, what's this? I think I need to remove this part. So if you look down here under the heading of current asset, bank, see working note 1, I have made this working note 1 is 3200. So 3200 is going to go there. So this you understood. So I am going to hide this again and then get my marker. So second step, subscription. Now you cannot put whole of this amount as income, so you need to go to the concerned ledger. Remember we used to make subscription account ledger, so you go here ledger. See, if you go to the ledger, income and expenditure account 26300, so this is your income. You need to show in the income statement 26300. Let's have a look at 26300. And then if you see this side, there is also irrecoverable debts. This I did in my lecture 1, how to treat irrecoverable debts. These are subscription not receivable from the members. Some members they quit the club, so this is not receivable, so this has to be shown as expenses. So we will see this 250, this 250. So let's have a look in an income statement, the impact. So income statement, you have subscription 26300, and then if we see down on the expenses 250. See, these two data you must make sure you go there. So this two is going to go there, 250, and this one that's gone there. So that's understood from your subscription account. So saying that, let's complete the rest of the subscription account. Here you have balance CD in the credit side. This becomes your BD. That BD means receivable. Opening balance in the debit side is receivable, so this will go in your current asset as 600 current asset, statement of financial position. So in statement of financial position, current asset, subscription receivable 600 here. See, you should make sure you put it here. So saying this, we have completed the subscription account. So subscription account we have completed by putting all the relevant data. This is complete, and this is also complete. So let's go to the third one, meal sale. So when you see meal sale, you must search relevant data. There's meal sale out here, there's meal expenses out here. So all the profit portion needs to be shown in the income statement, this minus this. So this and this I'm going to tick it together, so that next time you don't have to go through this. So look at the income statement now. So income statement, profit on meal sale 2600. So if you look up here, the sale of meal members here was 21,500 and made a profit of 2600. It's given out here directly, so you can simply put 2600. It's already given, or you can use these two data. It's the same thing. This minus this is your profit. That's your meal. Yeah, you can see your meal. So I think everyone understood this. Now let's look at the ledger as well, the meal ledger. So if you look at this ledger, there's your closing balance. The closing balance of 250. 250 will go in your asset side. You see your asset. 250 will go in your asset, current asset. Yeah, inventory of meal 250. Make sure you don't forget to put this as well. So that's what we need to understand. So that meal goes up, and then so meal is done. Now again we move forward. So coach ticket sales. So coach ticket sales, you have here 15,500 as receipt. So you need to show we are trying to calculate whether it's profit or not. Coach ticket here, and then there's coach hire here. So the difference, obviously the expense is more, so this is going to go as loss. So you'll have to show in the expenses section. So in the expenses section, this is going to be shown as a loss. So in the expenses section, you can see loss on coach trip 8,500. That's your 24,000 minus 15,500. Working note number 3. So if you look at working note number 3, you will get the answer. That's your working note number 3. Cost of coach trip is 2 into 12 into 1,000. That's 24,000. Sale of trip tickets equals to 620 into 20. That's 15,500. The difference is 8,500 loss. So the loss portion you put down here. That's how we do. So now we have completed this side. Now you go to the right side, furniture and fixture 3300. Now this furniture and fixture 3300 is furniture and fixture purchased. So you go to the furniture and fixture ledger. Let's go to furniture and ledger. So if you see here in the ledger, you see a ledger, there is your closing balance CD becomes BD becomes 15300. So 15300, this 15300 will be shown as your asset in the non-current asset account. Okay, furniture and fixture 15300 shown as non-current asset. Then we need to deduct depreciation out here. So depreciation, if you want to know the depreciation amount, here you need to understand that depreciation is maintained under provision method. So you don't have depreciation shown in this asset account. This asset is at cost. So down here we need to see that depreciation amount. The depreciation for the year is 1530. From here you know that this is opening balance of provision for depreciation. This is the closing balance, and then this 1530 is the depreciation for the year. So 1530 will go in your expenses, and then this CD will become your BD. The closing provision 3930 you will have to deduct from the cost. There is cost of 1530. So that's what we are going to show. Okay, so in the income statement 1530 is shown as expenses. You can see here depreciation expenses, and then in the statement of financial position you need to put the cost is 15300, and then accumulated depreciation 3930. That's deducted out here. So that this minus this comes here 11370. That is the net book value of the fixture and furniture and fixtures. And for premises, the cost is 1 lakh from here up here, 1 lakhs, or you can say 100,000. So 100,000, you don't have any accumulated depreciation, since question is saying depreciation is not to be done. So you deduct this, you get 100 lakhs as your net book value. So then you add this 100 lakhs and 11370, you get your 11370. This $111,370 as the net book value, and the total accumulated depreciation is 3930. Total cost of non-current assets is 115,300. That's how we solve it. So back to our furniture and fixture. So furniture and fixture, we understood how to trade it. So this means this amount you don't record in the income statement nor in the statement of financial position. What you need to do is you need to go to the concerned ledger. This is your ledger, and then from there you need to extract the information. In the income and expenditure account 1530 is shown as expenses, and this CD becomes BD. This provision is deducted in the statement of financial position. So that's done. So meal purchase, no need to do, it's already ticked. This is also ticked, no need to do. So now we have remaining other running cost. So other running cost is your expenses. You need to show in the expenses of income statement. Let's have a look. You have other running cost 18100, but if you read up here question number 6, staff cost of 200 was accrued at the end of the year. So it is payable. Payable also needed to be added. It needs to be added. So we are going to add in other running cost. So this is your working. Other running cost equals 18100. That's the cash payment plus 200 outstanding. You added 18300. This will be shown in your income statement. So in the income statement, you have other running cost, working note number 4, 18300. This way. You can also show it separately if you want. You can show 100 other running cost 18100, and then you can write staff expenses payable 200. If you show it, that's also correct. But here we have clubbed it up. We have added in one heading itself. So that completes. This completes our other running costs as well. So now we have completely recorded all the receipt and payment. So nothing is left to be recorded. So once you record all this, you will notice that your income statement will be correct, assuming you don't miss out anything from here. So don't miss out any working notes from here. The working notes have already been inserted here, so it will be correct now. So if you look in your income statement, finally the income subscription, we know how it came. We know profit on sale of meal, less expenses this way, loss on cost strip, recoverable debt, depreciation of final fixture, other running expense, you put it. So you add this total expenses, it comes to 2850, subtract from the total income, you get your surplus. That's your income statement. Then for statement of financial position, I don't think there's anything new out here. Since there's accumulated depreciation, we have presented it this way: original cost, accumulated depreciation, net book value. This I think you have understood. Then current asset we have got from all the list. Current asset is here. Total of current asset is 4050. So if you add 4050 plus 111370, you get your total assets 115420. Then under capital and liabilities, capital fund at beginning we have 114850. This is given here, 114850. You put this, add surplus 220, you add surplus, you add it comes to 115170. Then under current liabilities we have advance subscription 50, advance subscription 50. Then you have staff cost payable 200. This payable has to go here, make sure you understand that. So you add this two, you get 250 as total liabilities, and then if you add 115170 plus 250, you get 115420 as your total capital and liabilities, and this must be equal to your total assets. Total assets out here 115420. So that completes your answer. So saying this, I hope you understood this sum. Try solving it on your own, and if you have problem, go through this video, and if you still have problem, you can always ask me. So thank you everyone. I will see you in the next class.